following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi guys, welcome back to the show, and good to be back. Had just a meltdown with our hosting company on Friday. Not really with the hosting company. There was some kind of backbone that was having problems that they were specifically hardwired into, which I found out later and was really kind of upset about. I was like, you guys don't have an alternative backbone that you deal with, and that was shocking actually, but we're getting through it now, and I apologize for the scanner being down again. I couldn't do the show because all of when I show you things on my screen, these are all remote desktop connections to that server farm. So we've got about 10 different servers going on that I can access different things that are running different things. So it's all connected to that place, which is a damnable shame. But thanks for coming back. I do a pre-market video that should be posted on the TFNN site every day. I did today's video on Apple. And as we look at the NASDAQ, we're going to kind of relate that to Apple a little bit and these moves up that have happened recently. And we might as well get right into that. And I hope you guys are up and at them. Let's see. The people on the West Coast. I don't know. Do they have daylight? Do they do daylight savings time? There's like some little section in Arizona that they don't do that. Anyway, I enjoyed getting an hour less sleep this morning. But thanks, guys, from the West Coast, if you're in that little area that doesn't do that. All right, let's hit Apple really quick. And this is the premise here, and I think this is a really strong trade. It's a decent high probability trade. And as we look at the chart, we're going to go right into the scanner, and we're going to look at Apple. And it's just kind of glaringly on our radar screen with that big red 10 there in that top. So if I go into the scanner and I go, okay, I'm looking at the S&P 500. I want to see what's going on here. So what these are instruments that are showing weakness recently, even in the face of the onslaught of the power move up in the S&Ps and the NASDAQ. NASDAQ not as good, but I just wanted to find stocks like, what's showing the weakness, but also had a little bit of an empathetic, sympathetic rally up into these daily inflection points. Now, I could have chose this one also, and there's nothing there. So that's interesting. That's really wild. But as we look at this, Apple's one of the stocks that meets that criteria. So what we're doing is we're looking at, okay, why did it meet this criteria? All right, here's the weekly. We talked about this 104, 104.29 area. Why is that the case? This is the current unfair lows and the previous unfair lows of the long-term weekly. When they line up, that is a really, really powerful, more than powerful inflection point. If you kind of connect the dots here, you'll notice that this has been in force since, first week of September of 2015. That's a pretty serious event to have this in force for this long on the weekly. In fact, I haven't seen a stock. I think this is one of the only stocks I've seen that has been in force. It's March now, so that's 6-7 months here. It's pretty strong resistance area, and we also got up into this little area here, the daily unfair highs 102.05. So long-term players, there's that break above that 97 and some change area that happened a couple of weeks ago. But now that it seems to me that, these markets have moved up, Apple recently hasn't really, cooperated or participated in the last week or so. And the NASDAQ has kind of stumbled here a little bit too. It's reaching resistance. I'll show you that in a second. these weekly unfair highs on the daily, these weekly unfair lows on the weekly, this is considered a very heavy, what I call DMZ area to look at from the short side. So when you have these markets blow off like this, you try to find things that are raising their hand and saying, hey, I'm not cooperating. If we have a downturn, I'm the one that's going to fall the fastest. This is that type of situation, in my opinion. And again, Apple can run, what is it? Is it still 12 or 13% of the NASDAQ? Is that the latest calculations on this? Maybe somebody can tell me that. But here's the NASDAQ situation. Here's the June contract. And at the same time, the S&P's kind of made new highs. This thing kind of stumbled a little bit. Apple mainly is one of the culprits, not cooperating completely. 43.46 unfair highs on this daily profile. So again, this is the NASDAQ. Apple's kind of languishing. You've got some reasons to trade that from the short side. If the market continues to go up, I think it's going to be not as painful as some things could be if you're short and wrong. So that's what we're always looking for. So here's the daily now on the June contract. This is very similar to the March contract, and this, relatively same inflection points on a relative scale relative to the price of the March or the June. So 1998's the unfair highs on the daily. I'm looking for this to get back down below. This is the S&Ps now. Get back down below here. I think the NASDAQ could give it some help. And then just to kind of, even though we've already explored this fair auction, I think we've got and we came back and retested this weekly unfair low here, just like we did on the March contract. I don't think we're going to, retest this today, but I think we could move down a little bit. When we look at the breadth situation on both of these, I'm going to go back to the indices heat grid. And as we look at this, let's just pull up the S&Ps here. Strong across the board. There's absolutely no question about that. But let me go into the NASDAQ here. Why is my screen frozen? Here we go. Don't you love it when the computer upgrades everything to Windows 10 without your permission? Let's go into the NASDAQ here. Even though we're pretty much in concert across the board, and as we look at this, you really don't have a ton of indications that we're going to turn around. We've got to pay attention to those inflection points that we reached. And remember, when we look at those, and I'm going to go back to our daily here, when we look at these, this is 43.48 here. We give you these right in the, on the breadth chart screen. You got to pay attention to those. And again, I think it might be a good chance to sit here and do a contra trade on the south side. But remember, like Joey talked about, don't get mixed up too much within what is the long-term view. Why is this not closing? Of what the general long-term view is. We're going to talk about that a little bit more when we come back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. Here's that NASDAQ daily chart. Just wanted to point out that number again, 43, 48, 25. That's going to be a little bit of resistance here on this thing. Good question about the 30-year. I've actually got an email into our tech guys right now. The problem is when you roll over, chart had no doubt on my scanner. Yeah. When you roll over to different months, especially 3 months out in these treasuries, we would love to go continuous contracts on these things. I promise you we would. But we've been around and round about that, and then people are trading the underlying instrument on their charts, and they're executing, and it's and that's for folks who have the indicators. And then they've got some different levels based on the continuous, and RJP. I've got an email in right now after you said that about that 30-year. I think it's one of the only products that's doing that right now on the rollover. I'll get an answer for you. I'm noticing it. I think we just need to put a little bit more data going backwards on the on that product. We just don't have enough data right now, seemingly, but I'll check into it. And I apologize for that particular instrument having that issue. I don't think there's anything else having that issue right now. So if you've got the scanner, that 30-year is going to be a little deficient when it comes to that snapshot chart on the scanner. What we do with that is, well, I could explain it to you, but we're going to look at it in just a bit here. So, all right, so the 10-year, we had a little bit of a move down here. I don't have to tell you that. Here's the June contract, broke below that 2901, 2902. Why is that so important? There's a 2901. Here's a 2902. I was looking at this really, we had a little bit of a bounce off of there, and then put kaboom. And that was, about the similar time the ECB started yapping, and then we had a dollar crush, and I was down Friday. So as far as being able to transmit things and being able to trade that bounce off of 97.60, that's what stops are for, without question. Last week, that was just a complete implosion. So I was a little bit wrong on buying support on the dollar, still around 97.60. So again, this is kind of a wait and see for me now. I hope we get some retracements or a new profile this is what I'm hoping here. I'm hoping that we get a new profile appear, or at least attempt to appear. We have a new inflection point up top. This is a kind of a sea change event for this, and we've also got some global currencies which are again ramping up against the dollar. My dreams of going to Canada and buying little plots of land in Nova Scotia are over right now. The Canadian dollar has really valued itself. I'm just kidding. But as we look at the things like the Australian dollar, we haven't had a retracement back into that 74.40 area. That's going to be kind of nice if that happens. You know what to do then. If you want to back the truck up and put a tight stop, that's up to you. But here's a daily. Unfortunately, no reasons to really think this is going to pull back right now. We've had that run up, and this has been nice. But let's go into and again, we're kind of referencing that dollar situation. Here's the Canadian dollar, the crude oil situation. Again, we broke down again below profiles. The dollar weakness. This is, got the crude oil component built into it too. We're going to take a look at the ruble again for the world's population who's trading the ruble. Here's the situation. Reach these weekly unfair lows. This was the targets for the evaluation of the ruble, and inversely the chart's coming down. So again, you got this 69.03 support now. We are not really showing a lot of reasons to get long this thing. I'm just looking at this as we met our targets, kind of like that S&P trade. We met our targets at 2007 on the March contract. Not worth it to do sometimes the contra trade against these type of moves. We're going to take a look at the Japanese yen really quick. This is one, again, just kind of floating around here on a new profile in the long-term weekly, and I'm going to go into the scanner. I'm going to pull up my Forex section really quick. Sometimes when I snap around, these visuals don't happen in the hot.com den there. So let me know if you don't see what I'm showing here. Where are we at? Why is this doing this? Okay. All right, so we got a top there on the Japanese yen. So, we can go in here and we can look and see the level of the market. I like seeing all these profiles at one time. And, what do we do with this now? It seems to me, considering we've got a couple of different heavy situations on the yen trade, I think this is going to be looked at as resistance here, 113.72, 73. I think this is going to stay somewhat in a range. I think the dollar's going to, bounce around here and not really show a lot of direction right now, north or south. So 113.72, 73 looks like it can be used or utilized as a shorting opportunity. Here's the 240s. Got that 113.89. Rest of the DMZ up there. So I'm a little bit more bearish on the yen right now. I can't believe I'm saying that right now. Been so bullish on the yen in the past. Here we go. All right, so we're going to take a look at the Shanghai. I want you to look at this. And again, the U.S. markets have kind of disconnected from the chaos and the nonsense of the Shanghai. But you blow this up. If you look at this kind of higher lows, lower highs, talking about doing an option play, if you can find some ETFs that are going to be related to China, and maybe some people in the den can throw those out there. It might not be a bad time to look at the volatility's kind of contracted here. We're kind of forming that wedge, if you will. Thanks, John from Philadelphia. CAF, ASH, is that one of them? Let me see. Yeah, you might be able to look at this with a chance to do that similar type soybean volatility play, if you will, that we were talking about actually amazingly with John from Philadelphia the other day. So that's kind of what I'm looking at with the Shanghai. Don't know the direction here, and I don't know if anybody can know this direction. So if you've got that contraction and volatility, just the simple buy the strangle situation, yeah, couple, not too close in, not too far out on the option months and strikes. Cool. All right. So on that note, we're going to look at the bean situation here. We're going to look at November beans because that's what we were looking at last week. And had a pretty powerful move on Friday, which was really interesting. I still don't think, I mean, you still got that opportunity, if you will, on this particular product. This is the new crop. A lot of things can happen between now and November. And this is kind of a long-term volatility play. So we're going to brush on that a little bit more when we come back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Had my e-signal reboot here. That's what's going on. Okay, going back to the November bean situation, and we want to look at corn too. Again, here's the long-term view. Please get going here. We're coming up slowly. Here we go. All right. So we talked about the long-term resistance on this. And John from Philadelphia pointed this out. This thing's been in force seemingly forever. this long-term weekly profile had that fake out there, which, I didn't understand that when that happened back in November 30th that week, and then we reversed immediately. I didn't understand the breakout. It was almost like the squeeze play of all times. But 915 and a half or a quarter, I think, is the that resistance point. This is in fractions here, but that's going to be kind of the breakout situation. But I think you're in a really good spot, like we talked about last week, to do that volatility play. Here's the daily. Nothing really saying we're going to completely slow down there with a new supply area, but here's the 240s, and this is, again, here's the 868 starting point here, where we started breaking above profiles here, and we usually try to find support. As you can see, after these breakouts, that was kind of a runaway freight train, new profile. Never really got down to that next support at 884 for this, but this is entirely possible for this thing to pull back to 893, 894. So again, here's the top of this 240 for short-term guys. That's going to be somewhat of a resistance area in the short term. And then you've got those 915 targets up top. So again, the big numbers that we want to pay attention to, and this is not in the scanner because we're still looking at May in the scanner. And I actually should probably change that, but this is the month of notoriety here. The November contract, 893, 894 support on the short term, 906, another big inflection point, 96 and a half, then that 915 and the quarter, 915 and a half. Okay, so we're going to look at July wheat really quick. I was actually talking to my peeps about this one. They're going, oh God, here's the move we were all expecting. Okay, well, the way I see this right now on the July contract, and again, this is the inventories versus what's planted type tug of war here. I think you still got that opportunity to play this on the volatility buy strangle side. But again, all we're doing right now is basically retracing back up into that, and we did this last week. We kissed this 485, 486 area. We're just kind of hovering here. You've got another resistance area at 469. So, or excuse me, I can't see anymore, 489. Okay, so we've got 46 coupled with this 489. That's going to be some resistance on this contract. We could, again, entirely come back down to around this 459 area, but this is kind of the close below, go back and retrace and touch. That's the way I'm looking at this. And then you've also got this July wheat sitting right here now. I would consider yourself meeting some targets on this particular product right now. Any breakouts back above into those former fair auctions on the weekly, and then kind of breaking stride here. Remember, we've come down from 6 on this contract, 628, and we reached a low of what, 4? Why can I not see this? Hold on. Here we go. Reached a low of 449, so that's a pretty decent pullback. But again, long-term breaking stride would be getting back above 489, and then you'd be looking at that as support. But right now, all we've done, bear market, go back and retrace to some inflection points. Here's the short term on July wheat, 484. And again, we could come back all the way down into 472 easily on the short term trade. All righty. Okay. We got to take a look at gold here really quick. I was thinking about, why has, this is kind of the canary in the coal mine. You don't normally see this happening in conjunction with some of the other things that are going on. But, I was thinking about, Trump, he gets in front of these people and, like Ben Carson was saying, he's two different guys. I kind of believe that actually, but whatever. He's, there's some anger out there, and that's all I'm going to say. But, what if he becomes the nominee? What if he becomes president? What if he starts dismantling some of the current infrastructure as far as what these multinational corporations do, which he's completely correct. I don't think anybody's going to argue with this, even the Democrats, that a lot of these jobs have been sent offshore. Is that right for the country? No. I mean, how can you say it's right, really? But what it's done is it's tamed inflation. I mean, when we go to Walmart and buy a bunch of stuff made in China, it's cheap. It's cheap because they're playing currency games. A lot of the things that he talks about are not totally untrue. So what is that really doing? So if he becomes the nominee and let's just say he becomes president, then jobs, okay, what if he dismantles some of these things? Jobs come back. Obviously, people have to get paid more. Obviously, products are going to cost more. And inflation starts happening. And therefore, really, how much really is your purchasing power? People have jobs, but again, the inflation kind of takes care of that and keeps things normalized. So we've kind of ratcheted down. It is what it is right now. We've ratcheted down all this, but it's just sitting there thinking, why does this thing continue to go up? I guess I finally convinced myself that there could be an issue here. So now, like Joey was talking about, we've got 1253. And I probably didn't make any sense right then. But we've got 1253, top of the profile on the daily. I'm kind of scared to go long gold or short gold, and I'm just not. Here's that 1264 lid on the weekly. I'm not convinced that I got to go long or short this thing right now. I'm just kind of waiting patiently. I think we could. If you're going to go long, I'd rather see a pullback to 1218, 1219. That's the bottom of the profile here. I'm going to show you the scanner. And sorry for rambling about, you can't time trades on what I just said, by the way. Those are those theoretical what if things that CNBC is famous for. That always leaves the door open on both sides. I heard this guy the other day. It just killed me. It was one of these guys with the tie and the white shoes. And, well, I'm long right now, but I'm considering going short. And but I think the market could be in range. I mean, they just sometimes make me sick. So here's the situation on gold. You've got the top and top on the weekly and daily. We're going to take a look at that when we come back. This is where we're at in relation to those inflection points.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to this show. We're looking at gold. We're just finishing up. That there's a little bit, obviously things to be concerned about. 1264 on this June contract, 1253. That DMZ is a little bit of a resistance. I don't think this is the time to buy or go short gold. And reason being is, I'm thinking we could actually pull back to 1219. Then it would be something to really, really look at as an intermediate buy point. All right. Okay, so what we're going to do, we're going to take a look at the utilities again. This is just confounding me. It's basically trading the technicals. Pre-market, it looks like we're trading on the XLU. No prints this morning. That's a shame. We've got the daily situation, and it's just really wild that the 10-year coming off. This thing is just not really slowed down that much. We obviously kind of gapped up and reversed on Friday when I wasn't on the air. But as we look at this and as we look at the 10-year, we're going to go back and reference the 10-year really quick, the June contract. Haven't had a retracement back up into those weekly unfair lows or daily unfair lows around 129. That could happen. These utilities, they could find support again, and it looks like this is nothing to play around with on the short side. Just wanted to still state that case. It's just amazing. They're usually the anti-stocks. You look at the Procter & Gamble's of the world. This is one of the only stocks that was down on Friday in the Dow. And again, this is, it's kind of you guys have traded long enough. This particular sector and this particular stock in general. Market starts getting happy. This thing starts coming off. It's sitting at support right now. 81.65 has pulled back pre-market. It looks like we got a print here at 81.72. So again, Procter & Gamble been a decent move up here. 83 has been a long-term lid here for a while, but we're coming back down in support. And I think the market could be looking at a little bit of a pullback here below 2,000 on the June contract. So again, Procter & Gamble looking a little supportive as that utility sector is kind of the anti-sector, looking still a little longish. All right, so going back into the scanner. All right, let me pull this up. We're going to go into our ETF heat grid. All systems go on the intermediate. This is our 1 hour. This is our 4 hour. This is our daily. And this is the weekly. All right. So again, looking at all these and looking at overextensions and talking about let me go back into the June contract of the S&Ps. In my opinion, we've already, come back and tested on the June contract this 1971 and even lower. But, how do you play this now? This is something that we're looking at. We've got new 240 supply. You've got an unfair high at 212, 213. And you've got this 1998 sitting here that I completely, truly believe is going to be tested at bare minimum. So here's that June contract. So what does that mean looking at the sectors? I think what you want to do here is on our daily, you want to look at this discretionary XLY for a second. This is the one kind of that's in the cellar here, XLY. All right. So as we look at this, this is the weekly. This is that XLY coming back and retesting that 7509. We're trading, don't have any prints this morning, but this is a situation on the daily. So in my opinion, this discretionary sector, the breadth seller dweller on the daily, on the intermediate, getting back below 7705, we could have a little bit of a ride down on this. And that's the way I'm looking at the XLY and some of the internals. So how do we trade the internals? We're going to go into the XLY and we're going to pull up and try to find things that are really not cooperating, things that have been in a downtrend. I'm just going to try to find things that are sitting at the top of the profile and at the bottom here on the daily. So that's non-existent. So let's go into the top and let's look at things that are trend down, trend down. Not a lot trend downs here with the arrows, okay? We're going to opt out on that. We're going to go into this. And we're going to look at, let's just see, nothing sitting at inflection points. Daggone it. All right, so H&R Block, let's just take a look at that. I'm sorry. I'm sorry, I typed in the wrong symbol. Hold on. The HRB. Man, you would think this stock of all stocks is. All right, so here's H&R Block. Obviously, some problems 2 weeks ago. Looking at this and looking at this 2986 on the weekly, this is going to be what you're hoping for to get a retracement back up into to really whack this thing. And we've got 2896 sitting there so on the daily. So you've got a really decent resistance collection area, if you will, between 29 and 2986 on H&R Block. Keep that in mind. Don't see this thing running away from us on the long side here. Let's look at Ford Motor Company really quick. Getting some prints this morning. Okay. Why is this showing? What the heck is going on here? I don't know why that's showing there. Hold on. Got something going on wrong there. All right, let's move on. RL. I'm going to have to check on that. RL. Okay, so again, apologize for Ford. We're going to check on that. Something is, anyway, 10104 is the weekly unfair low. This is Ralph Lauren, RL. All right, so we've rallied all the way from the breakdown. This is kind of what we're hoping to happen on H&R Block. We've closed below. We've kind of rallied all the way back up into 10104 last week. High print was 101, so we got very, very close to this. In my opinion, here's that 9907 on the daily. You've got a chance to place stops above this 10104 on Ralph Lauren, and that's another stock in the consumer discretionary. It looks extremely ripe. NWS, let's take a look at this one. Why did Ford flash in there? That's weird. Let me go back to let me check this out here. Ford. That may have been some wrong print from eSignal. We're going to look into this when we get back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. I think we're having some issues with eSignal this morning. I think sometimes they flash some prints that are weird, so that's why Ford was showing up as one of those picks. But if you go into your charts, you definitely can see that this is a stock that's not trading below, or is green on the weekly, put it that way. I think that very similar situation in NWS. Let me see this. Yeah. There's something wrong with the eSignal data coming in. Our actual charts are right, but this landscape view is coming off the real-time feed. Don't know what's going on there, so I apologize for that. All right, so we're going to go do a little review here. We've covered quite a few globally watched instruments here, but as we go back to the S&Ps, again, I'm looking for this to retrace back bare minimum into that 1998 area and possibly even lower. We've got a new 240 240 profile where 1991, 92 is going to be that unfair low on the week on the 240s. A lot of times these 240s are entirely explored, and our automated systems a lot of times will use this to regulate the trade one way or the other. And that means, excuse me, not one way or the other, regulate the trade in the long-term trend. So one of the filters or the exit strategies more than the filter is, if we get below, if the trend is up and we get below, like we did there, below the regulator of the long-term trend up, based on the breadth kind of being that barometer of whether we're supposed to block out the long side or short side. In this case, block out the short side. We've been talking about that recently. The 240s are kind of a trailing stop on that notion. So we'll put like a 30% of the height of the 240 box below the bottom of that 240 box in this case is like a stop out of the long-term trend up, and then we can kind of wait patiently and try to pick it up later. But giving it a little room on a long-term trending type situation, I know that's a lot of space there between 1991 and 2012, but again, that's kind of the long-term system stop out mechanism, one of them that you can choose. And I like that stop out mechanism. Those 240s are very, very powerful. So again, we're looking for retracements on that. 10-year, we're looking for a little bit of a bounce here and get back and retrace back up into 129. That's the take on the 10-year. The gold trade, again, is kind of a do-nothing situation right now, in my opinion. You're between 1264 and 1253. And again, looking at the really supportive pullback, if we get, can kind of get back into this fair auction and close within this fair auction, we can, on the daily, I think we can look at 1219 as something we can really look at as a buy point on gold. Haven't had any real serious pullbacks in this lately. The bean trade, we've talked about that. The financials, I want to look at this really quick before we get off the air. This is one that's just kind of ramped back up. Again, that 10-year falling off is going to accommodate this particular ETF very well. So we've gotten back up into this unfair high, 2237. Excuse me, we closed above it, and we're trading 2243 right now. So again, and this is the daily on the XLF, with the possibility of that 10-year retracement, this is a little bit more of a scarier trade, and I think the financials are looking farther out, actually. This is something I'm going to stay away from and look at only as a possibility to trade if we start getting back below 1237, and that would be with the 10-year retracing back up into 129. That's a short-term trade, guys. Stay tuned for Larry. We'll be back again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.